China's latest tech is on full display. Some are calling this a watershed moment.
Chinese competition is concerning to many players in the market because, of course, we've had lots of IP restrictions on technology going into China. And yet somehow China seems to have gone up the technology curve substantially.
This is essentially China drawing a red line in the sand and saying, if you cross this, we're going to have a trade war again.
Think about this. Apple is lobbying the White House to use their chips.
Today, we are reacting to the most recent development coming from China and CXMT sending shockwaves across the tech and financial industry. But before we begin, if you enjoy this kind of content, please subscribe. Every bit of support is infinitely appreciated. Okay, let's get to it.
So the market has a new chip champion this week, and it's CXMT, which raised $8.6 billion in a listing in Shanghai on Monday, and then promptly rallied almost 500%, vaulting it into the ranks of some of the biggest companies on earth. It's now the biggest listed company in mainland China. It's bigger than MasterCard, it's bigger than Intel. So why are Asian chip stocks tumbling amid this new competition from China? It really boils down to the arrival of this new entrant in the market that, first of all, has just raised a load of capital to expand, and second of all, if you're an investor and you like the chip theme, you probably own a lot of Asian chip makers to begin with. So if you want to buy CXMT's shares, you're going to have to make room for something in the portfolio, which probably means dumping Samsung or SK Hynix or TSMC or another name like that. And that's ultimately why the market seems to be having such trouble digesting this new arrival. But for now, they'll have to wait. As it's listed in Shanghai, that means most global investors won't have immediate access to the stock. So Apple has been asking the Trump administration reportedly for a bit of leeway in terms of what memory it can use in its products. Remember that Apple recently had to hike prices across a range of its devices, principally because the cost of memory is getting so high because it's also competing with the AI industry for memory chips. On the other hand, a US company like Micron is quite keen to keep Chinese memory out of US supply chains, so is putting equal amounts of pressure in the opposite direction. The Trump administration is caught in the middle.
CXMT's IPO just shocked the chip market, and Samsung and SK Hynix felt it. The South Korean Kospi was halted, and investors are dumping Korean incumbents to make room. But the most striking detail is Apple lobbying Trump for leeway to use Chinese memory. Why? Because memory costs are crushing its margins, and CXMT's chips are more than good enough for iPhones. Suddenly, China's hardware does not look so far behind. Otherwise, Apple would not be begging Washington for flexibility. But of course, there is strong resistance. Micron is lobbying just as hard to keep Chinese memory out. So the Trump administration is caught in the middle between two major players in the tech industry. Washington wants separation, but American companies increasingly want Chinese components because they are cheaper, more competitive, and more efficient. That leaves Washington with a difficult choice.
CXMT is at the cornerstone of President Xi's self-sufficiency push, and nowhere is this clearer than here at the World AI Conference in Shanghai, where China's latest tech is on full display. Some are calling this a watershed moment, the emergence of a homegrown chip champion relying on local suppliers, local data service to test and refine its products.
If you look at the entire Chinese AI infrastructure build-out and model build-out, there are so many players in this area. You're talking about Huawei, Alibaba, Tencent, ByteDance. But in memory chip making, especially HBMs that is powering basically entire AI compute build-out, CXMT is the only viable player in this industry for China. So that's why the company is so critical for the entire project to win.
A watershed moment. And they're right. But they are also quick to forget how this development actually happened. Initially, Chinese companies were seen as producers of low-end, cheaper products. But then China supposedly just stumbles into success and somehow becomes competitive, as if none of this had been planned with long-term thinking in mind. The key insight here is that CXMT is not the only viable player supporting China's broader technology build-out. There is also Huawei in networking, and Alibaba, Tencent, and ByteDance in AI models. But we keep looking at them as individual companies, rather than recognizing what they really are is an ecosystem.
One of the points the market should understand about China is these things don't just come out of nowhere. DeepSeek didn't just come out of nowhere. And from my time living in China, reporting on the tech industry, I was there for 3 years in Guangzhou, traveling around all of China, all the key tech hubs like Shenzhen, up in Beijing and Shanghai, visiting all these companies, seeing what was going on. There is a lot of work that happens behind the scenes that you don't hear about on purpose. China doesn't like to make a big, show and dance about what they're up to at this point, for multiple reasons. One of those is for fear of sticking their head above the parapet and getting hit with some sort of US export restrictions. That is a key concern. There are multiple other reasons as well. So these things don't just happen. There is a lot of work that's happening, and there are a lot of brilliant, smart engineers who've worked at US companies, who've worked at European companies, who are back in China, who are building companies or working as part of the companies that are trying to build out this homegrown tech stack in China.
Exactly. DeepSeek didn't emerge from a vacuum, and CXMT didn't appear overnight. There is a lot of work that happens behind the scenes that you don't hear about on purpose. China often keeps its progress quiet because it does not need to make noise. The work speaks for itself. And Arjun says it openly. Chinese AI models are on par with, and in some areas surpassing, what is coming out of the frontier labs in the United States. They are not catching up. They are already there. Our Western framing is always lagging behind. China is closing the gap, because admitting parity would mean admitting that containment has failed. Now, another key detail is that China is not simply trying to beat the West at its own game. China is making Western technology less relevant to its domestic market while building independent capabilities of its own.
I think, Anna, the issue on Chinese competition is concerning to many players in the market because, of course, we've had lots of IP restrictions on technology going into China. And yet, somehow, China seems to have gone up the technology curve substantially in terms of the ability to produce chips, the ability to create AI frontier models, and potentially now even into chip equipment, which of course ASML is really the monopoly for both what they call deep ultraviolet, DUV, and EUV, extreme ultraviolet machines. So that's where I think the concern is coming in from that. And then with regards to the likes of the NVIDIA situation in terms of the circular deals, this isn't a new story in of itself, but the numbers mentioned in terms of dollars continue to move higher and higher. And the worries are how much of the AI ecosystem is being, if you like, artificially inflated by NVIDIA's kind of financing of their own ecosystem.
Neil brings the perspective that individual stock analysts often miss. Chinese competition is not just about chips. It is about the entire technology stack, and potentially now even chip-making equipment, where ASML has long held an effective monopoly. And we are watching that narrative crumble in real time, week after week. But let's talk about Neil's sharpest point, NVIDIA's circular deals. The AI ecosystem may be getting artificially inflated by NVIDIA financing parts of its own market. NVIDIA invests in AI startups that then use that funding to buy NVIDIA chips. Those startups raise additional capital at inflated valuations, partly because they have access to NVIDIA hardware. The cycle keeps spinning until someone finally asks the obvious questions. Where is the revenue? Where is the profit? And where is the real-world use case? Look at how Alphabet, Google's parent company, recorded a negative free cash flow in the second quarter of this year, the first time in its history as a public company. The hyperscalers, such as Google, Meta, and Amazon, are spending hundreds of billions of dollars on AI infrastructure, but monetization remains uncertain, and the return on investment is still largely speculative.
Yeah, exactly. I think what's happening here is China came out of this latest round of U.S. tariffs last week with an effective tariff rate of about 22%, and China is now saying less than 2 months before Xi and Trump were supposed to meet in the U.S. that if it goes any more above around 30%, which is where it was before the Supreme Court ruled against President Trump, then there are going to be problems. This is essentially China drawing a red line in the sand and saying, if you cross this, we're going to have a trade war again. And on top of that, we have these accusations from U.S. officials that China has taken U.S. AI technology and used it for its own company's benefit. So the trade war between the U.S. and China is still at a stable place, but this is just another signal that China's only going to take U.S. tariffs so far, and U.S. accusations of the kind of the tech theft that have been lobbed at Beijing so much before they hit back at Washington.
So, in simple terms, the United States is running out of leverage. Tariffs only work when the other side needs you more than you need them. And now, China is quietly signaling something very different. We have built enough capacity that we no longer need you as much as you think we do.
Think about this. Apple is lobbying the White House to use their chips.
I absolutely don't think CXMT is a threat at all. And I've written about it. I'll tell you why. One is they are 3 cadence behind, where the technology from Micron and SK Hynix, which are the 2 main leaders in this memory wars, their yield is 25%, which means they weigh 75% of the die. They're 3 cadence behind. Their pricing is 30% higher. Their HBM output is way lower than Micron and SK Hynix. So I don't think they have any competitive moat with these former ones. On top of it, China's own internal demand cannot be fulfilled by CXMT. So I think the memory trade stays within SK Hynix, Samsung, and Micron continuing forward.
So a venture capital managing partner, not a chip engineer, tells Fox Business that CXMT is not a threat, meaning not worthy competition. 3 generations behind, pricing 30% higher, and no competitive moat. So, everyone please, calm down and go home. Nothing to see here. Right. But the quote-unquote expert conveniently omits, CXMT just raised $8.6 billion in Asia's largest IPO of 2026. It debuted at an $85.5 billion valuation, bigger than Intel, bigger than MasterCard. It rallied nearly 500% on day one. The no competitive moat company just logged a net income increase of over 2,200% in the first half of this year. Revenue surged 719% year on year in Q1 2026. So I'll let you decide if this is a true development or just hype as many think it is. But anyway, I hope you enjoyed today's reporting. If you did, please subscribe. Every bit of support is highly appreciated. And let me know in the comments, why is the default response from us in the West to deny or play down any developments coming from China? See you in the next one.